Hi and welcome to Weekly Market View. It's Tuesday the 15th of October 2013. Okay, so we're still seeing the stalemate continuing in the US, seeing some negotiations going backwards and forwards. Looked like we could be nearing a decision late Friday afternoon, and we saw some positivity reflected throughout the markets, and then people disappointed over the weekend that we didn't actually see any resolution, and we still remain sort of back at square one. Today there has been some more progress with talks, and it looks as though hopefully we will be reaching a decision, but it's very hard to tell. But people are still hopeful to reach something before that sort of October 17th date, which is being talked about quite a bit in the markets. Yesterday we had Columbus Day in the US, so it was a market holiday, so volumes tended to be quite light, but again, the market's just largely dominated by this talk in the US, people sitting on the sidelines, not really sure exactly how to trade this one. Okay, in terms of other data that we had over the weekend in Germany, we're actually seeing some positivity. It looks as though we are likely to see the formation of a grand coalition hopefully soon, so a better political situation there. And we've also seen the meeting of the Eurogroup, the finance ministers from across the Eurozone. Been seeing that over the last couple of days, so seeing some comments come out of there, which has been, just something to keep an eye out for. In terms of data that we had yesterday, the only real data was the Eurozone industrial production data, and this coming in better than expected, up 1% month over month. In terms of data that we've seen today, so for Tuesday, we had German import price data kicking off this morning, that coming in at slightly higher than expected at 0.1% month over month. The main data really for the Eurozone was the ZEW surveys that we saw. In terms of current assessment, we saw numbers slightly lower than we were expecting, but in terms of expectations, people are actually looking quite positive, and the sentiment good and came in higher than expected, so decent data there really in terms of sentiment. For the UK, the big numbers today were the inflation numbers. We had consumer price inflation data, producer price and retail price inflation data. Consumer price inflation data and the retail price inflation came in largely in line with expectation. What we did see was producer prices actually coming in quite a bit lower than expected, so that was sort of the main focus that we saw this morning in the UK. In terms of the US, this afternoon we've had the Empire manufacturing number, but with the US this week obviously, and with the continuation of the government shutdown, we're not seeing the releases of the usual data that we would be expecting to see, so the data release is very light on the US front. So in terms of where that sort of left us trading today, we've got the FTSE around 65-60 mark, we've got the Dow future around 15,234. For currencies, we had seen some weakness in the dollar with these rumbling problems again dominated. If we start to see a resolution, we'll likely see the strength come back, but as it continues, as people are worried that we might see a default from the US, we'll see some weakness continue in the dollar. For euro dollar, we're seeing one spot 34.98, and for cable we're seeing one spot 59.48. For commodities, for gold, we've seen some weakness here for gold recently, currently trading around 12.64 spot 30, and then for crude we've got 101 spot 63. Okay, so in terms of data that we're seeing out for the rest of the week, tomorrow from the Eurozone we've got CPI data, so a little bit of inflation data in the morning, expecting that at 1.1 from 1.3 last. The big numbers are probably going to be from the UK, the employment data that we're going to see, obviously very closely watched and largely anticipated now, the UK employment picture, as we've got that 7% threshold from the Bank of England in terms of monetary policy. So what we're expecting to see tomorrow from the employment picture is we're expecting to see jobless claims fall again like we saw last time, but we saw probably a smaller fall than we saw last time, so maybe data not as good, but hopefully still an improving picture for the employment, but not expecting any change for the actual rates that we're seeing. We're expecting those to stay on hold, and then for the US in the afternoon, just some private release data, so mortgage applications and a little bit of other data. Also worth noting that tomorrow evening we see the release of the Fed Beige Book, that will come out around 7 o'clock British summertime. Into Thursday, we've got from Europe the current account data and construction output data, and then again probably the important data from the UK, it's going to be retail sales, expecting those to come in at 0.4% from a down 1% last, so looking for some improvement there from the UK retail sales, and then in the afternoon we get from the US the usual initial jobless and continuing claims. Obviously people will be really watching out for those, probably taking the most focus on those in the US this week, as it's sort of all we've got really to come out for, and hopefully to build a picture of the data that we have been missing out on from the government. So expecting initial jobless to come in around 335,000 And then we get the Philadelphia Fed manufacturing index in the afternoon from the US, expecting that around 15 from 22.3 last, so a little bit lower, a little bit of weakness there. In terms of data for Friday, it's very light on the data front. We're not really expecting any releases from the UK or the US. We get China GDP overnight and expecting that to come in at 7.8 from 7.5% last, so looking for an improvement in China. And then the only other release that we're really going to see is the LTRO repayments, that announcement from the ECB of what banks will be repaying of the 3-year loans the next Wednesday. It's been a bit of a mixed picture for this one recently. It's sort of going into 5-7 billion and then down to a few million. No real set pattern that we're seeing. We do tend to see the same number of banks repay every week, and what was interesting to note last week was that we only saw one bank repaying that second LTRO, so it seemed that we saw a fall not only in the amount repaid but also in the number of participants repaying. So worth watching out for that, because obviously there's a large focus on the ECB liquidity situation. Okay, so that's really it for this week. In terms of data that we're not seeing from the US, it might just be worth bearing in mind the releases that we were supposed to see had the government been functioning. It would have been the tick flows, CPI, housing data in terms of housing starts and building permits, and then also some industrial production data. But I think focus of the week, we've got quite a lot of important UK data, obviously the employment tomorrow, and then the retail sales into Thursday. But obviously the US government shutdown will be the overriding theme for the week. Okay, that's it for this week. As usual, any feedback much appreciated. Thanks.